Hey traders, Ryan here. Just going to do a quick recap for crude oil today and what I saw in the day and how I approached it. So off of the open, you can see here that we opened inside the previous day's value, and we basically see we opened just at the value area high, and we auctioned down to a clear support level. I mean, you could have possibly looked for a long here. I mean, you can see on Friday we had this like weird triple sort of distribution. We had that upper distribution, the lower distribution, and then into the close we see the market trading back in that upper distribution with this sort of weird up and down action in K period, if I remember correctly. So obviously this was quite an important level going into today, and you could have looked obviously to buy this off of the previous day's point of control possibly, and try to catch this move to the buy side. But I mean, realistically, with what's been going on in crude oil, obviously I don't think that would have been the best way to trade today. I mean, realistically, we really need to wait for an extreme, and obviously the extreme here would have been that previous low. So we opened right into the 5 exponential moving average, and we see that push way, and we see, like I said, we have the developing value area higher. We push down into that Vwap and into the developing value area low, which you could have been looking for some long confluence on this spike down into the open with stops below the value area. That's one trade idea you could have looked for, but obviously with these rotational days, I mean, you realistically want to be using the higher time frame confluence, and you want to be leaning off good support levels. So I didn't take this long today. I mean, I'd rather have tried to short it back, just short it off of the highs, but obviously with the higher time frame context that's been going on at the minute, I basically waited to sell it off of support, resistance overhead. So I mean, if we quickly have a look here at the current structure on crude, and we can clearly see here that we're just in this range. I mean, the range is from 98.50 down to a low of 96.70. I mean, we've seen 1, 2, 3, 4, 5, 6. This is a 7-day accumulation down here now. So I mean, since we see that last breakdown, I mean, we can clearly see that we've accepted prices in this range. So until we break out of this range, one way or the other, we need to sell the highs and buy the lows on support. Obviously in a bracketing range bound market, that's just the simple strategy is to sell the highs and buy the lows until we see the breakout. What everyone tries to do is they try to time the breakout and then end up getting mauled with the retail, with the institutions that are just there creating these sort of fake outs like this, and you see everyone trying to jump on board and sell the breakout, and then they all just get stopped out in this two-way trade sort of choppy price action. So obviously with a real balance in market, it's very, very important to fade the extremes until we see the breakout. I mean, today was a classic. I mean, we could have seen the breakout. I mean, let me get the 240-minute chart up quickly. Let me get rid of this. Let me get the 240. Oh, this happens every time. Just minimise it. So you can see here on the 240-minute bars, I mean, we've got this sort of compression. We've got this clear trend line from the high. We've got this trend line from the low. You can see this cleared trading range that we're in currently, and this was the potential breakout today, and we came off and we tested above that previous high and this clear overhead resistance level. And obviously you get all the breakout traders piling on thinking there's going to be a breakout, but what happens? They all get flushed out and out of the market. So obviously the best way to trade a breakout market is either to be positioned for the breakout from the other side, or wait for the breakout to happen and go with the imbalance once you see the market trading giving you that information. Until then, the market's range bound, and it is very important to sell the highs and buy the lows of a market using structure. But anyway, getting back to this, and what I did today, so you can clearly see the structure here. We had this sort of one time framing down that got taken out Friday, so we have two-way rotational trade back into the market. The exponential moving averages are obviously catching up with price now, and we came back to the next moving average on the time field, which is the 10 exponential moving average. So now we've broke the 5 exponential moving average. It's very, very important what we do here now, because that will lead the way most probably to the next directional breakout. If we open up tomorrow and we continue to trade below the 5 exponential moving average and reject yesterday's range, then obviously it's pretty much game on to test its lows into the 96.70s with a potential breakout. Until the breakout happens, like I said, we cannot predict it. We have to wait for the breakout. And again, if we start trading above the 5 exponential moving average, who knows, maybe we're going to start to one time frame up for 3 days, 4 days, 5 days, and come up and test some higher levels here. Just going to quickly run through what I was looking at today regards the higher time frame context. I mean, I know there's been a lot of talk on the forum recently about the higher time frame context and how you want to come in as intraday traders and just trade the intraday information because all of the information on the higher time frame is too much for you. But from what I have done and what I've learned over the last sort of 3-4 years, the higher time frame stuff is very vital to what I do every day. I mean, I know Ben suggested the other day that just use the intraday sort of value areas and stuff like that, but if you used the intraday value areas and you didn't use the higher time frame context today, you wouldn't have known what was going on, because today there was some very key information for me for my short. I mean, I basically sold into this overhead resistance over above, into this sort of 98.50s, into the 10 exponential moving average. So I waited for the market to come up to here and I sold this area, and what gave me confidence in selling this area is the fact that, one, we've got the yearly VWAP here above us in this range, this bracket, so that's the first key filter with this high volume load into the 98.80s. Secondly, I can see here that the value has just caught up with price on the quarterly here. I mean, this is very important information. I mean, we broke down below last quarter's value area low. We've not been able to trade back inside it, and we've seen this two-way trade and volume accumulated down here. And this quarter has finally caught up with price here. And you can see here that the market started to reject the 1.5. So last week I was referencing this area. I was referencing this area of the 1.5. And on Thursday we broke that overnight, and they see a pullback to again the value area low from last quarter. And finally today we see the test of the developing value area low. So I mean, this is what I was leaning off from my short to the highest area, other than the fact that we were in the bracket and this was the higher the bracket. This was obviously very key for me for my to get short and what I did today. So as you can see, as we rotated up to here, we see that test, and we see a nice rejection and a move down. So that's what I was leaning off of today. I mean, I'm going to quickly show you the the monthly as well, and you can see this month we're just rotational. So until we see the next directional sort of breakout here on the monthly and an imbalance created, obviously selling above the 1.5 standard deviation reversions to the mean is very probable until we start to reject value and we start to see direction. So very key to use these directional filters for your trade locations and for your strategy around the current market conditions. I mean, the current market conditions on crude oil is values catching up with price, and we're bracketing. So I'm going to quickly go through also the 5-day composites here, which is the weekly TPOs. And you can see we had this elongation 2 weeks ago, and then last week we just see this sort of real key balancing, and then obviously this week's developing. But I mean, if we merge this all together, you can see that the mean prices are still below us. So the expectation is obviously to see obviously sellers to the mean and then buyers back to the mean until we see the next directional breakout. We're going to come back and we're going to clean up this, or we're going to come down and we're going to break below this sort of $96-97 a barrel, and we're going to see a reversion back to the developing value area low on the yearly. So some key sort of structural support into this sort of $94 a barrel here. So again, just some information here. But I mean, today we came up, we cleaned up that poor high from last week, and we found sellers here. So depending on what we do here, obviously if we open below, we're looking to pretty much sell into these 98s as the market pullbacks to yesterday's fair prices back down. It was pretty much 97.30s, and you can see this clear volume area here, and obviously into the low of the bracket, which is into the 96.60s. So again, until we break this area, then we're just looking for two-way trade, and we're just leaning off of the intraday context, using the higher time frame filters for trade locations and a market conviction and structure. I'm just going to quickly show you today also what I was looking at. So what I did, I mean, I got a little bit aggressive here today with my entry here, and as soon as we came up and started to test these areas, I started to get short. So obviously this is quite hard to do because I'm basically fading an imbalanced market to the buy side pretty much, and you can see here on the Globex that what was happening here. So I mean, if value kept leading price higher, then I would have got stopped out, and I would have took a stop loss on this trade. But I got quite aggressive again because the fact that we were testing this quarterly, and this was my trade location area, so I got short into this area, which worked out very nice. It was very accurate. My stops were below the 70, above the 70s, which we can clearly see on our 250 minute chart. Again, even though I faded a real imbalanced market on a day time frame, on the higher time frame context, we're still balancing, and we're still seeing two-way trade in the market. So my stop was above key structural support. If we broke out here, then I would have been wrong, and I would have tried to find a long entry for the breakout, but obviously that didn't happen, and we already had like 110 tick. This is another thing as well. I mean, we hit the daily ATR, so I mean today the ATR currently is sitting around between 105 to 120, so roughly about 110 ticks. And as you can see on the footprint today, just get the range, RTX range, we put 112 ticks in for the day. So as soon as we hit that 100 tick ATR, it was also confidence for me to start looking for shorts. Obviously with that on the cards there, with hitting the average true range for the day there. Obviously it's not a good enough excuse to get into a trade, but it's just added context to the current market situation and what we're doing here. So I think what you could have done realistically for a more conservative entry here is you could have waited for this responsive selling back in, and then you could have looked to start sell here. I mean, I started to add on this into my position as I got scaled out, but like I said, that was the next perfect opportunity for the short there, and that was the more conservative approach. And if we look at that on the 30-minute bars, I mean, me and Ben have gone through this many times. We see the imbalance, 1, 2, 3, 4 periods of one time frame, and then obviously we hit this key resistance area above, and this is where you can see the key selling coming. We see that spike top, you see it sell down, and then you see the market come back into value here. But then you can see the compression. You can see the compression, two-way trade back into the market. And then this bar here was, like I said, was the perfect bar to sell it. I mean, if you sell it with stops above the previous high, you got clear the previous auction's high, and you've got clear structural support here because we've got the high. So once you have your resting sell limits into the value area higher, the market comes up and fills you. And once this gets filled, you obviously start watching the footprint, and you have your stops above the high of day. I mean, if the market comes through and you start to see imbalance and buying come into the market, then you can either get out, or you can just wait for your stops to get filled and then take the next gameplay that the market's showing you. But again, this is how I approached it on today. I mean, if we didn't have the 10 exponential moving average, the edge of this current trading range, and the quarterly development value area low catching up with price, then I wouldn't have just nakedly jumped in and faded this market. But to me, there was key structural support on the higher time frame context, and this is what gave me the confidence to sell into this rally today. So I'm pushing forward tomorrow. Obviously we just have to play this day by day now, but we just have to see what the major context here with this market is. Is this market gonna see a breakout below the sort of $97 a barrel? And this will be because value is leading price lower, or are we going to see last quarter's range accepted, and we're going to see a destination trade to the other side, and to at least back to the $100 a barrel, $101 a barrel, which was where these clear means are, and this upper volume is at the minute. So just this is the key context here, is pretty much around the trading range that we're in currently, and what way value is going to push price, whether we're going to come back for mean reversions, or we're going to see a continued imbalance for this quarter and lower prices into the 94 and possibly lower into the lower 90s here. So yeah, that's pretty much just what I did for the day. I mean, regards obviously how to come in and do this. I mean, off the open, this is why it's very hard for me to prepare myself or anyone else for the day's trade, because it's very unique to how the market generated information comes into the market every day. I can't come in the morning at 9 o'clock and say, I'm going to sell here, I'm going to buy here. Today I probably could have obviously said that this is the area that I would have been looking to trade, but who knows? I mean, we could have seen this auction down, and then we could have started trading below this point of control into this 97.50s, and then we could have broke below the development value area low from Friday, and then I could have looked for short confluence into this area here. It just all depends on how we open, how the market reacts, how we're reacting around the higher time frames, what the market makers are coming in doing. It's very unique to the market generated information that happens once the market opens up at 9 o'clock. So obviously to go through all the hypotheses and scenarios is very difficult, because I don't know how big the initial balance is going to be. I don't know if we're going to get buying or selling responsive. I don't know what we're going to do. There's too many scenarios and there's too much information to make a solid plan. This is why you have to be very, very flexible, and you have to be very, very good at reading context and market generated information to manage risk and manage your trade locations from a logical perspective. Anyway, if you do have any questions around what I've talked about here, or what we've talked about in the forum, then please do not hesitate to ask, and just post. Take care and goodbye.